Alright, this is Chris from Market Swing Trader. This educational video is about the stochastics. This is only used for educational purpose and is not an endorsement to purchase any stock option presented in this educational video. Please consult a licensed financial advisor before investing real money. Alrighty, this is got to be one of my favorite indicators. There's really only three major indicators that I really use, and as you can see on the chart right here, these dotted lines are your monthly pivot points, and also the custom indicator that I wrote myself using pivot point moving averages. And then the bottom part right here, the full stochastics right here is at the bottom. That is my favorite indicator. And the stochastics, it's a momentum indicator. It gives you an idea of when things can be overbought and oversold. So on the Thinkorswim platform, to add the indicator, you can go over here to go to Studies, go to Add Study, scroll down to Momentum Studies, and then click right there M through S, and you can click on Stochastics Slow. Now they say Stochastics Full and Stochastics Slow. That's the best. They are the same one. Now the Stochastics Fast I do not use. It just seems like a lot more noise. But I use the Stochastics Slow, the full stochastics. And as you can see right here, it says Stochastics Full. Also, another way to add studies in Thinkorswim platform is click on that wrench right there. And then up here in the search box, just type in S-T-O-C-H, and you'll see it right there, Stochastics Full. You can double click on it, and then what happens is that it'll come down here. Now, when you see the Stochastics Full, the overbought area is set at the 80 mark, the oversold area is set at the 20 mark, the percent K is 14, and the percent D is 3. Sometimes there's another attribute, and that is 3, which is a smoothing average. So sometimes you'll hear the settings for these stochastics is 14, 3, and 3. And that's all that means. But here on Thinkorswim platform, they just have the 14 and 3. So, and right down here, you can change the color of it, of the full D, and the color of the percent K. I just leave it as the defaults, and then when you click Apply OK, it'll show up right down here in the bottom of the chart. Now, let's go over what the stochastics really is. It's a momentum indicator. It gives you overbought and oversold areas. The top part right here, as you can see on the right hand side, it's the 80 mark. That is the overbought area, and the 20 mark is the oversold area. Basically what that is saying is, let's look right here. Let's look right in here in this area. And what that is saying is when the percent K and the D gets above the 80 mark, it's an indication that the stock is overbought. It doesn't mean it can't keep going up, because we all know stocks, we've seen stocks just keep ramping up and up and up and up. And as you can see here, the stochastics came to the over right in here. It got to the overbought area, but AXP kept running up, and more than 3 periods, which is, this is a daily chart, as you can see right up here, it got embedded, what is called embedded. Now that just means that it still has strength, but normally I just go ahead and start scaling out, and once it gets embedded like that, then just I lock in my profits, I set my stops where I just get completely out and move on to the next trade, and just cycle my money into something else that is oversold. So And the oversold area is right in here below the 20 mark. Once we get down into the 20 mark, it's considered oversold. So you're looking for a bounce. The percent K and the percent D. This red line is your percent K, and that teal line is your percent D. So when the percent K crosses over the percent D, when it crosses over, as you can see right here, and then right around in here, it started crossing over. There we got a crossover. It was still below the 20 mark, and you can start looking to scale into a trade once it starts crossing over, and maybe the next day you would have added to the trade, because then both lines came up above the 20 mark, and you're pretty good to go normally. And we all know stocks could do head fakes and pop up and then all of a sudden go back down. I mean, that's fine. That's just the nature of trading. You win some, you lose some. We all know it's a numbers game. As long as your winners are bigger than your losers. Now, there's something that you need to understand about using these stochastics. And when you see the percent K, this red line, and the percent D, when you see them start spreading apart, you see right in here the area, we have a lot of space in between there. When they start spreading apart, that is a real good indication of momentum. And as you can see, we had a nice higher high days. We had some nice momentum, and we had a higher high here, and then we got overbought. And as you can see on this candle right here, we kind of had an indecision candle, and then we started closing below it. And then once we closed below this moving average line right here, then once we closed above it, once we closed below it, we just kind of ran down. As you can see, the percent K crossed over the D, crossed over the 80 mark, and as you can see, we kind of sold off, and then we got into the oversold area again. And as you can see, we got into the oversold, and we kind of got embedded down in there until right around in there we kind of crossed over. And that is basically the basics of using the stochastics indicator. Let's see, let me look back here and see if I can't find something. There we go. This is one of the good reasons of using the stochastics indicator. Okay, as you can see here, this line that I drew on the stochastics, this trend line, is it kind of a little bit sloping downward a little bit. So, but if you look here, the stock actually did not make a lower low, because you had a low, okay, see right here you had a low, and then right here you had a pullback, but it did not make a lower low. Okay, so since it didn't make a lower low, but the stochastics had a slope downward, that is a good indication. That's a really good indication of strength, because here we got to the oversold area, we ran up, we made a pullback. Here we got down to the oversold area. However, this trend line, we did not make a lower low. Now if this low came all the way down into here, then that would be a different story. But we didn't make a lower low, and once it crossed over, as you can see, when the stochastics started crossing over on this line right here, we started crossing over, and we had a nice little run up. So that's some things to look at, the divergence in the stochastics, like I just showed you. That's one of the things to look for when you are trading with these stochastics, and you can use this on any time frames. Let's go over to the 15-minute chart. Stochastics works on the 15-minute chart as well. Let's let's see, let me get rid of show extended sessions. Alrighty. I mean, it works on the 15-minute chart as well. Oversold, had a nice little run up. Oversold, kind of gradually ran up. It works on all time frames on an hourly chart. I like looking at an hourly chart, 60-minute chart. This is really good for 60-minute chart. And we have to the oversold area. We ran up. And this is also another thing. When you see this right here, which is just basically a consolidation, and then your stochastics on an hourly chart just kind of started running down, but your stock is not really running down with the stochastics. Once you get that cross back over, you're looking for a nice little run. That's just some of the things to look for when using the stochastics. And okay, like right here, this is a current position that I am holding. This is WHR. As you can see, I drew a trend line right here. And I drew a trend line right here. And then I drew a trend line on the stochastics. So this is kind of coming down, hit the trend line, didn't hit it, but it got close to the monthly support pivot. And the stochastics made a lower low, but the stock itself pulled back and did not make a lower low. So I'm looking for a nice move upward. Okay, so once we get a nice move upward, we cross above this pivot point moving average. Stochastics is the percent K is looking like it wants to turn back up and cross back over. Once it does, then I can go ahead and add to the trade and move upward. And on this trade, I am actually on WHR, I am doing a calendar spread on this trade. So, and I'm looking for a move upward on this stock because of the stochastics and how it's set up. Alright, that is the basics of using the stochastics. If you want to learn more about it, there's a lot of information on the internet. Just go to Google or one of the search engines and look for the stochastics indicator. There's a certain algorithm that is used for these stochastics and the percent K and percent D. I just wanted to go over the basics of using it, and it's not the holy grail. Okay, no indicator is. It just gives you a guide of where the overbought and oversold area is. A lot of traders use this, and it's just an indicator, another indicator that you can use to guide you in the direction of the market. And that's just the basics of using the stochastics. Thank you.